Weekly developments in the global financial and merger markets with Blake.
Nashmi,
and Connor.
Starting off with recent financing within the M&A market, we have Nvidia agreeing to acquire Mellanox, which is an Israeli-American chip maker. Goldman Sachs represented Nvidia, while Credit Suisse and JP Morgan represented Mellanox. The deal was for $6.9 billion, which represented $125 a share, an all-cash deal. Microsoft originally hired Goldman Sachs to attempt to buy Mellanox back in February, where they offered $6 billion, but in the end, it was the acquisition premium of $1 billion that gave Nvidia the final deal last week. The acquisition unites two of the world's leading companies in high-performance computing. Both companies interconnect power over 250 of the world's top 500 supercomputers and have customers in every major cloud service and computer maker. The acquisition will allow Nvidia to optimize data center scale workloads across the entire computer, networking, and storage stack to achieve higher performance and lower operating costs for its customers. Secondly, we have Airbnb agreeing to acquire Hotel Tonight. So the details of the financing haven't been disclosed, but last time Hotel Tonight had been valued was back in March of 2017 at $463 million. And this would make the largest acquisition for Airbnb to date. Hotel Tonight is thought to be valued more than it was 2 years ago. Airbnb is valued at $31 billion, and they are looking to use this acquisition to mimic the services and standardization of traditional hotel chains. Lastly, we have Harvest Health agreeing to acquire Verano. This deal represents the largest U.S. pot deal to date, and it is worth $850 million, which is an all-stock deal with shares being priced at $8.79, in total 130 million shares. The deal also has Harvest shareholders owning 68% of the stock, while Verano shareholders get 32%. With the announcement coming this past Monday, shares were driven up 11%, which shows that the market was welcoming to the news. This acquisition also adds new markets in Illinois, Oklahoma, and New Jersey, which Harvest will be able to use as a hub for growth. Next, we have developments in the merger markets. The Lyft IPO is valued at just over $2.1 billion and is expected to be priced next week, and the company is expecting it to fall within the $62 to $68 price range. If these expectations are met, then Lyft could be worth $23 billion on the first day of trading. Lyft has also proposed the dual-class stock structure, meaning the ride-hailers, founders, execs, and VPs will own shares that give them 20 times the voting power of regular stockholders. Not everyone is a fan of this, but we have seen these dual-class stock structures set up in companies like Facebook and Google. Secondly, SoftBank is in talks to team up with Toyota to invest $1 billion into Uber's autonomous vehicle division. They're looking to close this deal next month, and SoftBank, who is known for investing in autonomous vehicles, has also previously invested $2.25 billion in GM Cruise, which is a competitor of Uber's. Uber is looking for its AV unit to succeed while moving forward with its anticipated IPO.
brief overview of economic conditions. In the three largest economic zones outside the United States, the European Union, EU, Japan, and China, economic growth rates are trending lower. In the EU, for example, the European Commission recently reduced its GDP growth rate estimate for 2019 to 1.5% from 1.9% in 2019. Economic conditions abroad can impact on the US firms, since 20% of all revenues generated by the S&P 500 companies are attributable to overseas markets. US GDP growth will slow to 2.3% in 2019 from 3% in 2018. The GDP growth rate is expected to remain between the 2% to 3% ideal range. Unemployment is forecast to continue at the natural rate. There isn't too much inflation or deflation. That's the Goldilocks economy. The employment rate ends the year at 3.7% in 2018. It will fall to 3.5% in 2019. Inflation was forecast to be 1.9% in 2018 and 2019. President Trump signed a new tax bill, the Tax Cuts and Jobs Act, into law in December 2017. This new tax bill affected the REIT securities. The 25% tax rate on the capital gains also could be lower than the income tax rate, which tops out at 37% under the old tax code.
Moving on to investment banking news. First off, HSBC is to promote 1,300 staff members. Among this, they've appointed 83 new managing directors, where about one-third are women. This is done as an attempt to strengthen their investment banking franchise, which has been struggling lately. Promoting women is an attempt to improve equality, as the gender gap pay at HSBC has been 61%, which is among the worst in large British corporations. HSBC has also hired seniors from both JP Morgan and Goldman Sachs. This happens only weeks after employees in the sales and advisory division were laid off in order to cut costs in February. Moving on, UBS CEO Sergio Ermotti issued a statement at a press conference in London earlier today, where he states that UBS's first quarter was one of the worst in recent history. This statement led to a decline in UBS shares of 2.6%, as well as a decline in European competitors Credit Suisse and Deutsche Bank stock. Revenues at the UBS investment banking division was down about one-third compared to the same period last year. Outside of the US, trading, mergers, and capital markets activity has slowed down significantly for the Swiss bank, which means UBS will continue to slow down hiring as well as cutting costs further by $300 million. The two German banks, Deutsche Bank and Commerzbank, confirms they are in merger talks, backed by the German government, who holds 15% stake in Commerzbank. The German finance minister and his deputy are favoring this deal because it will ensure that the country has a lender to support the export-driven economy. Both of the company's stock jumped on the news. Deutsche Bank by 2.9% and Commerzbank by 4.3%. By merging the two banks, they will have access to nearly 1.9 trillion euros of total assets and a combined market value of about 25 billion euros. According to Bloomberg, 30,000 jobs could also be at stake in the potential merger. If this merger goes through, it will create Europe's third biggest bank after HSBC and BNP Paribas. Lastly, Monday morning, Goldman Sachs announced that they will plan on hiring more women and minorities in entry-level analysts and associates job. The goal is to hire 50% women, 11% black employees, and 14% Hispanic and Latino employees. No deadline has been set by the CEO, David Solomon, who states fundamental change takes time.
As of March 2019, the International Money Fund, a fund with the responsibility of securing global financial stability, has predicted an economic slowdown, resulting in a 3.5% global growth for the fiscal year, down 20 basis points from last year. This slowdown is led by major global economies, including the US, China, Germany, and Japan. One major event causing this trend is the current US-China trade war. These proposed tariff increases caused GDP to decrease 10 basis points in 2018 and is predicted to fall 80 and then 140 basis points in 2019 and 2020. Despite expected slowdowns, the S&P Global Index has seen a 2.7% growth since the beginning of March. This is likely due to the U.S. announcing the delay of the March 1st tariff increases. This announcement resulted in a positive market reaction, especially in Japan's Nikkei 225, which immediately jumped 1%. In 2018, increased interest rates caused large volatility spikes in the U.S. and global economy. As of March 20th, 2019, the Federal Reserve announced that current interest rates will remain unchanged. As a result, financial institutions have reduced 30-year fixed mortgage rates and are increasing debt supply to creditworthy consumers. The current 30-year fixed mortgage rate has dropped to 4.31%, and the 10-year Treasury yield has decreased to 2.6%. While the Fed has postponed increasing interest rates, for now, the global debt growth will eventually force interest rates to rise and may bring volatility back into the market. In recent leveraged buyout activity, Hellman & Friedman acquired Ultimate Software Group in an all-cash transaction for $331.5 per share. This price is a 32% premium for current shareholders. Another major transaction recently declared is the Brookfield Business Partners move to acquire 100% of Johnson Control Power Solutions. This acquisition price is listed at $13.2 billion and is financed by 22.7% equity and the rest as long-term debt. This acquisition is currently estimated to launch in June 2019. One final deal to look out for is the rumored Nielsen Holdings LBO. This buyout has not yet been made public, but it is getting a lot of attention from buyers such as Hellman & Friedman, Blackstone, and Goldman Sachs Private Equity Group. This acquisition to take the company private is estimated at $10 billion. Latest trends in the hedge fund industry are taking a deeper look into plastic, specifically Visa and MasterCards. Renaissance Tech purchased 1.7 million shares of Visa, ending with a $219 million stake in the company. Previous studies in 2016 showed that only 21% of adults ages 23 to 35 use cash in consumer purchases. Even more recent studies show that only 30% of consumers use cash for purchases in 2018. CEO of Renaissance Tech, Jim Simon, believes that we are moving towards a plastic society. He also mentions that there are several other competing hedge funds that have made similar investments, and there's more to come. Another market update to look out for is the Republican tax overhaul that is taking place this year. This law eliminates tax deductions on expenses for wealthy taxpayers, such as paying management fees to hedge fund managers. This is resulting in hedge funds moving away from the standard 2-and-20 fee system. Donald Steinberg, a well-renowned hedge fund consultant, has even seen several funds reducing their management fees to 0%. And that concludes the Global Financial and Merger Market Update. Thank you.